Well, good morning, everyone. Today is Tuesday, and it's the 27th of August. This is the last week of August. September's about to start. Kids are back in school, and all the fun starts all over again. Now, Trump. Trump is driving the market right now. Trump made statements late Sunday night that he received encouraging calls from China on Sunday. The U.S. checked these news, and they contacted China, and they said China doesn't know anything about it. So again, Trump is driving the market, saying that things are improving. There's hopes of improvement with China, but there's absolutely no tangible evidence of it. Moreover, USB, the largest financial institution for wealth management in the world, told their investors to reduce their position in stocks. That's the first time they've said that since 2012. That's fairly important. Let's look at the charts now. And that's a bearish sentiment for the market. Again, I'm not expecting a lot of trading action until the end of the week because we're going to have the GDP on Thursday and employment data on Thursday and Friday, and that's going to impact the Fed's decision on whether they should lower rates again in September or not, and that's what the market is waiting for right now. Let's look at price action real quick here. All right, that's the Dow Jones. That is the 5-year period, but let's look at the 6-month period. Notice we hit the 200-day moving average yesterday. We bounced off and we're not that far up from it. That's not good. Now, we're building a pretty good support at the 200-day moving average, which means we should bounce a little higher, but it doesn't mean we're going to trade above the 50-day line. Let me put the 50-day line here as well. So you could see where we're at on the Dow. So in order for us to become bullish once again, we need to trade above the 26,630 level, or if you're trading the diamond, the DIA ETF, it's the 266.30 level. Before we get there, before we trade 2 days above there, the market's going to be neutral like it is right now, channel-y and sideways with very little directional bias. There is a chance if the Fed data is super positive or super negative that we may trade that. Let me explain to you why. If Fed data is really positive, okay, pay attention to this. This is important. If Fed data is really strong on Thursday and Friday, then what case does Jerome Powell have for lowering rates again in September? He doesn't. The only way he has a chance to lower rates is if Fed data shows signs of weakening. All right, so it actually may be better for the economy, at least for the short term, if the economy is a little weaker than stronger, if we want the Fed to lower rates again. Again, it's not an optimal situation because ultimately these little rate adjustments aren't going to drive the market long term. They're bandages, okay? It's kind of like what Trump is doing with China right now. It's just a bandage, saying that we're going to negotiate again. These are just talks. There's no certainty, there's no finality, there's no concrete decisions. So it's just a bunch of talk at this point, and talk doesn't really drive the market too long. Let's look at the S&P 500 here. That's the SPY. And again, we're still in the middle of the range. Let's look at the overnight session so you could see overnight data. This is the overnight data. Looks like we can trend a little bit higher. We're coming off of oversold levels. As you can see here, the E-mini S&P hit the 200-day moving average. I believe that happened on the overnight session, but it doesn't really matter. It still hit the 200-day moving average. The fact is we hit the 200-day moving average 2 times in the last month. That's not positive, folks. And USB telling their investors that they should leave or turn away from stocks and into bonds and cash. That's not positive either. Again, they're very conservative. These are investment bankers. They're very conservative. But again, something to be cautious about because we're trading under the 50-day moving average. Finally, looking at the long bond, again, this is the overnight session. We're not backing away. The bond market is pricing in an 80% chance that Fed rates will be lowered. If Fed rates will be lowered, the bond market will trade higher because bonds are inverse to interest rates. Again, it's very difficult to decide what's good for the market right now in the short term because Trump and the Fed kind of put us in a corner. meaning interest rates are already near historic lows. For us to go lower, economy has to go weaker. If economy goes weaker, the stock market goes weaker, and then interest rates are already near historic lows. So it's not an optimal position for the market. The best case scenario would be for Trump to say, let's just forget about this trade war for now and hope that'll rejuvenate the economy. Again, I'm not happy with price levels right now, and I'm not suggesting the market's going to go bear, but I'm suggesting we're in a twilight zone right now between the 50-day and the 200-day until the S&P gets above the 2940 level on the E-mini or the SPY gets above the 294.35 level. I suggest we tread lightly. I'll talk to you guys tomorrow, and again, don't expect a lot of volatility till Thursday and Friday when we have the GDP, employment data, and Friday jobless claims. I'll talk to you guys later. You guys have a great day. Folks, if you like this channel, if you like the info I'm providing from you at no cost, please send us an email. Let me know. If I don't get any emails, then I'm going to assume this isn't helpful. Send me an email, support@marketgeeks.com, and say hello to me. I'll respond back, I promise. I'll talk to you later. Bye.